Gold and silver have been recognized as valuable metals and were highly coveted by ancient civilizations. Precious metals still have their place in a savvy investor's portfolio in modern times. But which precious metal is best for investment purposes? And more importantly, why are they so volatile? There are many ways to buy precious metals like gold, silver, platinum, and a host of good reasons why you should give in to the treasure hunt. So if you're just getting started out in precious metals, read on to learn more about how they work and how you can invest in them. In this video, we are going to talk about investing in precious metals for beginners. If you are interested, so stay tuned into the video. Definitely you will find some value. Let's move on towards the topic. Gold. We'll start with the granddaddy of them all. Gold is unique for its durability, malleability, and ability to conduct both heat and electricity. It has some industrial applications in dentistry and electronics, but we know it principally as a base for jewelry and as a form of currency. Its value is determined by the market 24 hours a day, 7 days a week. Gold trades predominantly as a function of sentiment. Its price is less affected by the laws of supply and demand. This is because the new mine supply is vastly outweighed by the sheer size of above-ground, hoarded gold. To put it simply, when hoarders feel like selling, the price drops. When they want to buy, a new supply is quickly absorbed and gold prices are driven higher. Silver. Unlike gold, the price of silver swings between its perceived role as a store of value and its role as an industrial metal. For this reason, price fluctuations in this market are more volatile than in the market for gold. While silver roughly trades in line with gold as an item to be hoarded, the industrial supply or demand equation for the metal exerts an equally strong influence on its price. That equation has always fluctuated with new innovations, including silver's once predominant role in the photography industry has been eclipsed by the advent of the digital camera. The rise of a vast middle class in the emerging market economies of the East created an explosive demand for electrical appliances, medical products, and other industrial items that require silver inputs. From bearings to electrical connections, silver's properties made it a desired commodity. The use of silver in batteries, superconductor applications, and microcircuit markets. It's unclear whether, or to what extent, these developments will affect overall non-investment demand for silver. One fact remains. Silver's price is affected by its applications and is not just used in the fashion world or as a store of value. Are you still watching my video? So defiantly you will like my other videos as well. If you are interested in stock market or investing and you don't subscribe to my channel yet, so subscribe right now because I upload these types of videos regularly. Now move on towards the topic. Platinum. Like gold and silver, platinum trades around the clock on global commodities markets. It often tends to fetch a higher price than gold during routine periods of market and political stability, simply because it's much rarer. Far less of the metal is actually pulled from the ground annually. Palladium. Lesser known than the three metals mentioned above is palladium, which has more industrial uses. Palladium is a shiny, silvery metal used in many types of manufacturing processes, particularly for electronics and industrial products. It can also be used in dentistry, medicine, chemical applications, jewelry, and groundwater treatment. The majority of the world's supply of this rare metal, which has the atomic number 46 on the periodic table of elements, comes from mines located in the United States, Russia, South Africa, Zimbabwe, Canada, Australia, and Finland. Jewelers first incorporated palladium into jewelry in 1939. When mixed with yellow gold, the alloy forms a metal stronger than white gold. In 1967, the government of Tonga issued circulating palladium coins touting the coronation of King Tawhaha Tupu IV. This is the first recorded instance of palladium used in coinage. Metalworkers can create thin sheets of palladium, down to 1/250,000th of an inch. Pure palladium is malleable, but it becomes stronger and harder once someone works with the metal at room temperature. The largest industrial use for palladium is in catalytic converters because the metal serves as a great catalyst that speeds up chemical reactions. This shiny metal is 12.6% harder than platinum, making the element also more durable than platinum. Filling up your treasure chest. Let's take a look at the options available to those who want to invest in precious metals. Commodity exchange-traded funds. Exchange-traded funds are a convenient and liquid means of purchasing and selling gold, silver, palladium, or platinum. Investing in ETFs, though, doesn't give you access to the physical commodity, so you don't have a claim on the metal in the fund. You will not get the actual delivery of a gold bar or a silver coin. Common stocks and mutual funds. Shares of precious metals miners are leveraged to price movements in the precious metals. Unless you're aware of how mining stocks are valued, it may be wiser to stick to funds with managers with solid performance records. Futures and options. The futures and options markets offer liquidity and leverage to investors who want to make big bets on metals. The greatest potential profits and losses can be had with derivative products. Bullion. Coins and bars are strictly for those who have a place to put them, like a safe deposit box or safe. Certainly, for those who are expecting the worst, bullion is the only option, but for investors with a time horizon, bullion is illiquid and downright bothersome to hold. Certificates. Certificates offer investors all the benefits of physical gold ownership without the hassle of transportation and storage. That said, if you're looking for insurance in a real disaster, certificates are just paper. Don't expect anyone to take them in exchange for anything of value. After gaining so much information, I know now you have some questions in your mind like, are precious metals a good investment for you? Precious metals risks. What are the best ways to invest in precious metals? So don't worry, I'm here to answer these questions as well. So stay tuned into the video, and if you like my effort, so don't forget to subscribe my channel. Now move on towards the topic. Are precious metals a good investment for you? Precious metals offer unique inflationary protection. They have intrinsic value, carry no credit risk, and cannot be inflated. That means you can't print more of them. They also offer genuine upheaval insurance against financial or political/military upheavals. From an investment theory standpoint, precious metals also provide a low or negative correlation to other asset classes like stocks and bonds. This means even a small percentage of precious metals in a portfolio will reduce both volatility and risk. Precious metals risks. Every investment comes with its own set of risks. Although they may come with a certain degree of security, there is always some risk that comes with investing in precious metals. Prices for metals can drop due to technical imbalances, changes in supply and demand, geopolitical issues, and other related factors. That said, during times of economic uncertainty, sellers benefit, as prices tend to shoot up. What are the benefits of investing in precious metals over stocks? Investing in precious metals comes with some benefits over investing in stocks, such as being a hedge against inflation, having intrinsic value, no credit risk, a high level of liquidity, bringing diversity to a portfolio, and ease of purchasing. What are the best ways to invest in precious metals? The best way to invest in precious metals is either to buy the metal outright and hold the physical form, or to purchase ETFs that have significant exposure to precious metals or companies involved in the precious metals business. What is a disadvantage of investing in precious metals? Precious metals have no cash flow, so an individual will receive no income. If an individual holds the outright metal, there is also a storage cost associated with the investment. The bottom line: precious metals provide a useful and effective means of diversifying a portfolio. The trick to achieving success with them is to know your goals and risk profile before jumping in. The volatility of precious metals can be harnessed to accumulate wealth. Left unchecked, it can also lead to ruin. I hope now you understand how you can invest in precious metals. So that's it for today. And if you will find my video valuable, so don't forget to like and subscribe. We will meet again with another interesting topic. Till then, stay safe and stay happy.